Congratulations, team. We nailed our upside targets to the T. Let's go ahead and see what's going on for the following days in GTII. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with the GTII technicals, raw price action, and statistical threat of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys, so yes, we are definitely looking at GTII on the 12-hour chart here, and what we were talking about yesterday was the potential of creating or starting a very short-term upside move, of which we definitely got. Okay, so now referring to the stochastic momentum that we were looking at before, please remember that we've actually had these drawings here since we were at about here or here, around here, right? So this is actually to display that we were expecting the 14-day simple moving average to move upside of the 3-day exponential moving average, which is this line here, and we colored them just differently, right? So this is in fact what we're getting. We're still getting that upside pivot, and it's still moving according to plan. Now, the other thing that we did talk about was the potential of validating 1, 2, 3 drives of hidden bullish divergence, right? Regular bullish divergence. So we definitely got those 3 drives as well, and we have officially validated it, and now we're continuing on to that upside, right? I love it. I love it. I love it. Okay, you guys. So now let's go ahead and move on to the next chart that we definitely got those drives validated, right? So good. And here is the price action based on what we were looking at yesterday. Okay, so yesterday we noticed that we printed a very nice print of a hammer candle at the end of a downtrend with an incredible amount of volume, right? So we noticed that the volume was coming in, the volatility was already coming in. So notice that this hammer candle had a 1 right over here in the volume area. You'll see when I hover over the candle, that's the volume profile. Okay, so you'll see 1.275 million, very impressive volume there. And now look at today's volume traded. Okay, 2.34 million in today's price action. So very impressive move. Okay, very impressive times here, and you can see that we're actually the bulls are actually starting to take control over the bears. Okay, so this was very much an expected move. We definitely came up to the resistance of our target zones, right? So very nice. Let's move on to the next chart and go ahead and take a look. So this yesterday, please remember, you guys, that we were looking at this 6-hour volatility versus momentum backtest, and we noticed that we were in the process of creating a mean reversion, right? So what usually happens when we are critically expanded and we start a contraction phase, meaning that we would come right back down to the mean, right? So the center of this area would be our mean. And my algo, the reversion variant, was already telling us that we had a target of $1.78. Okay, now the target, of course, has since dropped since the price action has moved, right? So it's naturally mathematically programmed in order for it to do that. So yeah, so we ended up getting the high of, let's see. Oh yeah, so here is the H, right? I actually didn't pay attention to this until just recently. So please notice that the high is actually dead on $1.78 before we actually faced that rejection. And we are still actually, actually we closed. We definitely closed above the mean band. This is the candle here. This is the this is the prior candle, and this tiny little thing here, let me just go ahead and take that indicator out of the way so you can see what I mean. This one right here. Okay, so that is the candle, and we are officially closing above the reversion variant and the mean band. Okay, so this is very good, and it's actually suggesting a continuation to the upside. So if you are curious as to how we were able to determine this move to the upside, well, go ahead and take a gander at this. Anytime that volatility has expanded into this particular zone, though, okay, so this is a little progressive in my back test, because I usually like to see volatility start to contract from the critical volatility zone, which would be 90% and up. In this particular case, I noticed that we had a tiny little pivot on the momentum oscillator while retracing from within the 80 to 90% of volatility. Okay, so I took a back test in the 6-hour time frame throughout throughout 16 years of the GTII asset, right? So just like this, right? So that you can see what I actually back tested. Every single one of these iterations is a sample taken from when volatility met that particular criteria, right? So expand or contracting from 80 to 90%, meaning contracting to the downside, right? Paired with stochastic momentum making an upside pivot. So we had a very tiny pivot here yesterday, but those nuances usually are indicative of a potential something coming in, right? So the only thing stopping me from actually giving it like a let's go, this is definitely going to do it, right? I mean, everything really stops me from doing that naturally, right? But we were noticing here that we didn't have the control of the bulls, and since today, you can see that we definitely got a massive pump to the upside here in bull control, right? So it looks like the bulls are really trying to take over what the bears are doing. And in fact, we were here yesterday, right? We were way down here yesterday. So very, very impressive price action coming in. So congratulations to those who took that short-term trade. But I do have to be very honest with you. This signal has not matured, and the signal is still on its, it's still active, actually, very much active. And in fact, it's turning to be very strong. Okay, so as you can see here, the 3-day exponential moving average versus the 14-day exponential moving average of the stochastic momentum oscillator is still pivoted with a very convincing upside pivot here. The 14-day simple is now within the bullish control zone and suggesting for the 3-day it to reach that tomorrow as well. Okay, so this is definitely suggesting a continuation to the upside and potentially over the next day or two. Of course, anything can invalidate this, right? But it's just what the data is speaking. So anytime that criteria has met, those conditions, I have taken note of every iteration's upside thrust, the duration of the iteration, and the amount of times that volatility versus momentum have guessed that upside correctly versus incorrectly. Okay, so that gave us, all of those samples gave us this data set here. Okay, so you are looking at a total of 30 iterations, of which 22 were guessed correctly to the upside. It's pretty impressive already. That gives us an average upside accuracy of 73.33% with an average upside thrust of 98.06% over the span of about 14.18 days. Now, what that looks like is actually right up here. So applying 98.06% from the firing of the signal, which is the opening of this candle, which is right when we had it yesterday, right here. And you can see that also right down here. We didn't even have this pivot to the upside, which it was a little challenging to see this, right? So yeah, upon that firing, upon getting the upside from both the 3 EMA, or the EMA 3 and the SMA 14, then we were able to see that the probabilities for the upside are a lot greater than what we actually thought. And of course, 73.33%, not being perfect, not 100%, but still very, very considerable. Right, so 98.06% to the upside takes us at around $2.67-ish, and thus far we have moved 32.14% to the upside, reaching that $1.78 zone that we were speaking of just yesterday. Let's move on to the next chart and see what we have, because this guy still has massive thrust, and it's still suggesting a continuation to the upside. So just to give everybody kind of like that reminder over what I was talking about, you know, upon the failure of this of our inflection point here, we did mention that there's a high probability that we can be within this chop box, right? So that $1.78 target actually came to realize that resistance, right? So now we are actually looking like there could be a potential break out of this. Okay, so if there is a breakout of this, then we will have considered a new range. Okay, so please remember that I'm talking about $2.67 on average, so that's taking us to right about here. So 266, right? It would be to literally around the resistance of these candles here. So it's looking very bullish, and it's very exciting actually. So but do remember that we did speak of a highly likelihood of bouncing from this area here, literally just to come all the way back down and just to literally reject this and come all the way back up, right? So it's part of the ebb and flow of the markets, you guys. Okay, so please remember that I do not care what like the fundamentals are within this. What I do care about is the data. Okay, so if you if you're expecting me to speak of the dividends and all that stuff, I'm not going to speak of that, okay, you guys, because I don't follow those. I'm no longer a fundamental analyst. I now just practice mathematical concepts, and the data is really all that matters. And I found to have a deep edge within mathematical backtests and statistical probabilities, right? So that's actually what I do now, and I would like to share it with other people as well. Okay, so this is how we were able to see that upside. All right, you guys. So now, very important thing to touch down here, as we did talk about this yesterday. This is the bi-weekly Gaussian channel, and the Gaussian channel mean band was actually something that we have used for massive upside thrust, right? So for example, here, right, we actually we broke upside of the mean band, rejected from the top side of the Gaussian channel, and we came back, validated that support of the mean band, and then exploded to the upside. There have been some pretty exponential moves upon those tests, right? So, man, again, I'm sorry, you guys, for some reason I'm not getting the data all the way back to where I need it, right? If you are curious to see what I mean about this, please refer to yesterday's video where you will be able to see beyond 2014. So in fact, this is something that happened for months and months, and I had a target of about $18 per statistical backtest that was not completed. Right. So, and it wasn't that I knew that it was uncompleted. It was that they even put the little dinosaur here suggesting that was the beginning of the trade. Right. So I backtested the entire trading history according to me, because, we had the entire trading history based on that little beginning of the trading here. So I came up with a target of about $18. Since we got that new data magically just somehow appeared, but you can see here, look, check it out. Very interesting that you can actually see all these are back tests without any data in them, right? And this is literally going back very far. It doesn't even give me the date, but you can see what I mean on yesterday's video is what I'm trying to say. If you want to see what the Gaussian channel looks like before 2014, we had several iterations. One of which was actually a few of which were about 300%. Here's a 313. Here's a 300. This is a 310. So several iterations have been using this mean band of the Gaussian channel as kind of a very important support before an explosion to the upside. And I'm already liking what I'm seeing here, because we are definitely closing and closing and closing. We're using that mean band as a very important inflection point. Okay, so and yesterday we did notice that we were right down here somewhere, all the way down here. And we expressed the likelihood being pretty great to face an upside based on the support touch of that Gaussian channel mean band. So now let's go ahead and move on to the next chart here and stop dwelling on the information that we don't have, right? So please notice here, you guys, that yesterday I did mention that the 6-hour volatility versus momentum backtest was likely to start affecting the upper term timeframes, and that is exactly what it did. Okay, so I did speak about the 6-hour, would start affecting the 8, 12 daily, and maybe not the bi-daily, right? So let's go ahead and take a look at that now. So what I mean by that is actually the upside pivot on stochastic momentum for the upper time frames following the 6-hour. So now we have the 4-hour with an upside pivot, right? Upside pivot here. 6-hour, we obviously have that upside pivot. Please notice the 8-hour upside pivot. Please notice the 12-hour upside pivot, the daily with an upside pivot, and of course, just like we said, has not affected the bi-daily quite yet. Okay, you guys, so the data and the plan is still moving according to our expectations. Okay, you guys, so it is looking pretty good. This is the importance of backtesting, of applying mathematics to this, you guys, because this is, we speak about it all the time. We speak about it that they have a button to sell, they have a button to buy. That's because it's algorithmic. Okay, you guys, if it's algorithmic, it's mathematical. And that is the reason why I like to practice mathematical concepts, because the smart money do. Okay, they also do it. So I will too. All right, you guys. So please remember, first and foremost, that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, we're going to look at the RSI now and see what the potentials are for the coming day. This is the immediate short-term 30-minute. Of course, there is a little bit of pullback because we did overextend today, but that is a very, very short-lived pullback. In fact, we still have an upside pivot from that 14-day simple moving average looking very good. A little bit of consolidation here for the 4-hour time frame, which actually compels me to look at the bi-hourly and or the 6-hour. Okay, so the bi-hourly in the gravitational zone of the bull weakness percentile, very likely for us to get pulled to the upside. 14-day simple moving average still with an upside pivot. Let's see the 6-hour before we look at that 8. I usually don't like to look at it like this. I would like to do bigger jumps, right? But we still have an upside pivot here from the 14-day simple. RSI signal is definitely consolidating right now. Very likely for it to find a continuation to the upside in the upper term timeframes. Okay, so now this is the 8-hour here. It's definitely suggesting an upside pivot, pretty convincing upside as well. Curving that 14-day simple moving average, finding that pivot towards the upside. Notice the 12-hour here, finding a little bit of resistance from that 14-day simple moving average, but as you jump into the daily and the bi-daily, notice that we still have an upside to go. And the important thing here is that we're starting to pressure that 14-day simple to the upside now. When that happens, that usually indicates that we are likely to beat or succeed the upside of the 14-day simple instead of using it as a form of resistance, like here, right? So a rejection, right? But then we were getting that upside pivot here. We crossed above it. Right, so very nice. It looks like we may be doing that again, and also here on the 3-day time frame, starting to pivot that 14-day simple to the upside. The RSI signal is right in that gravitational zone of the bear weakness percentile. Very likely for us to cross it. All right, you guys, and of course, still very, very important to notice here that the 5-day iteration is still within that gravitational pull. We are absolutely above the 14-day simple moving average on a 5-day RSI read. This is very powerful. Still suggests an upside continuation here. Okay, you guys. So now as far as targets, remember $2.67 is essentially my top side, right? So I'm still in fact looking at it, right? So now if we were to look at the reversion variant here, then it looks like $2.34 is the top side of the bands. And yeah, so I would say anywhere between around 234 to about 267 could be a pretty a fair target, you know, in order for us to actually mature this this volatility versus momentum backtest. All right, you guys, but it's no guarantee. Remember, there's no guarantees in the markets. Any of this can be immediately invalidated due to sentiment or psychology, right? So just please remember that, you guys. And definitely also please remember that I still have a few seats left for the ArcMasters trading course. Find a Gmail in the link in the description below, and you will just send me an email. We'll get you enrolled, and it should be starting in the 3rd week of April. Okay, you guys, still a few seats available there. And please remember, guys, I need you to do your own due diligence, and everything will be good. All right. So with that said, I wish you very well, a very good night, and I will catch you at the bell mañana. Adios.